are tuned into the Richard Brown Show here on WCOM LP, Chapel Hill and Carrboro, 103.5 FM. I am Richard Brown, and I want to thank you for tuning into the show today. I want to thank you for taking the time out of your day to get educated on what this man right here, this expert right here, has to share with us. Before I get Mel Ellis to join me, I want to take a second to talk about what the Richard Brown Show is all about, what we do, why we do it, and how we do it. First off, what I believe and have developed the show to be is a space where African Americans can expand the possibilities, expand what we are not just interested in, but what we believe we can do, and then to take that and connect it to where we are, and to go from where we are to where we want to be. So there is this, and I say this all the time, I want to take dreams and turn them into reality. One way in which we do that is we try to give historical context. We try to give you an understanding that things just haven't happened. There has been reasons and people, policy, and history that has taken us to where we are today. And then what we try to do is say, look, let's take a good hard look at where we are. Are there things on the inside, or there's institutional issues that we need to be aware of that are impediments to where we want to go? You take all that, you try to understand what's going on, but more importantly, you have to dream. You have to believe. You got to have faith. You have got to have faith and an understanding that the things in which you are praying for, meditating on, and believing that you can do can actually happen. And so what happens is that you take those dreams, you take those beliefs, and you try to turn them into reality. Positive space for African Americans. That's what the Richard Brown Show is about. That's what I'm glad that you are here, taking time out of your day to enjoy, to partake, and I hope that it entertains. Today what we're going to do, Mel Ellis is joining us, and he is going to be sharing his breadth and depth of knowledge as it relates to the USDA programs. So let me get him to share all of his information and give us a really, really good understanding about another option. Thank you. Thank you, sir.
Thank you, Richard. Thank you for that kind introduction.
Oh, yeah. Oh,
and thank you for having me. And last but certainly not least, thank you for the wonderful work that you're doing and having this medium to express how people may be empowered and just being an uplifting force within the not just the local community, but throughout everywhere with the internet and technology. Mm-hmm. So thank you for all the positiveness that you bring and creating the space and the place to express ourselves.
Okay. Let me start our conversation specifically about what your role is at USDA and what exactly are you doing to help not just African Americans but people in general, given how things are kind of falling out with the economy, with lending, things of that nature.
Certainly. I am the Director of Single Family Housing for USDA Rural Development for the state of North Carolina. And this is a very unique opportunity.
Big time.
And that, thank you, sir. But this gives me the opportunity to do what I love best, and that's to help people improve their circumstances. And through our single family housing programs, we're able to provide affordable mortgage opportunities, as well as to help those with repair, loans, and grants at very affordable rates throughout rural North Carolina.
Okay, so you are the director and you deal with the housing side, so you don't deal with the farm side. See, everybody, not everybody, but a lot of people, when they think USDA, they thinking farms. They thinking farmers. Right. They thinking I can go to them and get a loan if, you know, my dream is, or I have a farm and I need help with this. That's not what you do.
that's not what I do. Even though I have a rural background, my undergraduate degree is in finance, and my master's degree is in agriculture economics. But I am not a meat inspector from USDA.
Not a meat inspector. That's when you hit it all the time.
Once I usually say that I'm from USDA,
right.
The very first thing is, well, are you a meat inspector? Well, no, I'm not qualified to inspect meat. I eat a lot of it, but I'm not qualified to do that.
All right.
Yes.
All right. So now, so let's delineate. So you are dealing with mortgages. You are dealing with mortgages in what areas, specifically in North Carolina, can you make the loans that you make?
Okay. Being the United States Department of Agriculture, we are allowed to make housing loans and grants within rural areas. North Carolina has, and the United States, we've emerged from an agrarian society to a very urbanized society. So the areas that I'm able to make loans in is decreasing, but just very basically, some of the areas that we're able to make loans in, of course, not your large metropolitan areas here, such as your Charlottes, your Raleigh, Durham, right in the city limits, your Greensboro. However, outside of those areas, that's where we come into play, and that's where we're able to be such a phenomenal force in the mortgage lending capacity.
Okay. So now, not inside the cities. However, there are plenty of places that are not inside the cities. What are you all doing, or how do you all deal with, I start to think about Wake County and how, me being a rural person myself, there are some rural counties that are literally turning into suburbs. How are you all dealing with that kind of city creep, as it were?
Very, very good question. What we must do, our regulations stipulate that we are to critique what we call riding the boundary lines every 10 years. And that's every time we have a United States Census update.
Okay, so you the boundary lines are based on the census?
Census data. We use this census data, and then we have the real experts, our folks who are working in our local offices throughout North Carolina. Those are the people that know the local area like the back of their hand.
Gotcha.
And if there are some areas that are, let's say, contiguous, where you can't really delineate between rural and urban, that's when these people come into play. We rely on their expertise in order to distinguish and to set those boundary lines.
Okay. All right. So those boundary lines change every 10 years. So say, for example, somebody's listening right now and they're wondering, where can I go to figure out if I fall within the boundary line or outside? Where might they go to get that information?
Okay, great. If you want to know where we can lend, we do have an interactive website where you can plug in an address. And the best place is it's a very long address. We haven't become that computer friendly.
Right.
But if you would Google USDA Rural Development eligibility, it would be the first hit which you receive. Also, to get a quicker response, you may call 919-873-2051, and that's my office. Anyone on my staff or me because this rings right at my desk. You may call me and I will help you find out areas in which we may be able to provide assistance to help you with your housing needs.
Okay. So now we've talked briefly about how do you decide whether you can make a loan in those areas. Let's talk about the size of the loan. Let's talk a little bit about how your loan might be different than, say, a predatory loan that somebody got a year, 2 years ago. Talk a little bit about how the financing of your loan looks different than what you might find in the market, even today. Okay. Please talk about those things.
I will. Predatory lending, boy, that really makes me cringe, because you could not get any further away from predatory lending than the USDA Rural Development loans. First of all, our employees, we're all federal employees. We're not paid on any type of commission.
Okay.
Whether we would make one loan, which we're not going to just sit there and make, or if we would make 1,000 loans, we would end up being paid the same thing. So we're gonna work hard in order to make successful homeowners and put them into those homes. One of the things that distinguishes our loan program from others, we provide a 100% mortgage loan through our guaranteed and our direct loan program.
So now break that down. Is that 100% loan to value? Is that 100%? What does that mean? Or how? I mean, break that down for people who may not kind of understand what that terminology is.
Sure. When I say 100%, that means we can loan 100% of the market value or the appraised value of that loan. Let's say if someone is selling a home for $100,000,
okay,
we require that an appraisal is conducted on that home in order to determine the market value.
Okay.
If that market value is determined to be $100,000 or above, then that means we can loan 100% of the value of that home. And not only that, that means you can actually go to a loan closing without having to use any of your personal money. All of that would end up being a 30-year or 33-year loan if you choose.
33-year fixed or 33-year adjustable?
All of our loans are fixed.
All your loans are fixed. So now let me take a second. Since you playing the good cop, I'm gonna have to play the bad cop.
All right.
And let's talk about what has happened in the predatory loan side. A lot of times what people will do is, the predatory loans that have been offered over the last, say, 8, 9, 10 years, particularly to minorities, particularly to black folks, that were being targeted. Say there were some credit dings, and we clearly have to get into credit, but what would happen is that they would offer a 10 or 15-year loan that was adjustable rate. Now, and what they would say is well, because you have these credit dings, what you want to do is over the next 1 or 2 years, pay on time and then refinance the loan. That's what was told to them at closing. Sometimes. Now, what would happen is if they paid on time, if they could pay on time, they would get to the end of the loan and find that oftentimes the appraisal of the loan was not in line with the market. The appraiser that they were working with would basically have them, in the case that you mentioned, as opposed to the house being worth $100,000, what they would do is the appraiser would make the house come in at 120. It would come in, and what would happen is, but really, all the other appraisals, the appraisals that are not bumping the price up,